While there's a raging bull market, it is not just the new retail investors which are seen flocking the street and increasing their direct participation in stocks, but also the new investment products. And this time around, a popular fad is investing in small cases, which has become lately a talk of the town. Most leading brokers are today offering small cases, which allows investors to buy or to sell a ready-made basket of stocks. Interesting, right? I'm Sakshi Batra, and over the next 3 minutes, I will tell you everything that you should know about small cases. Let's start off with the basics first. So what is a small case? Now, the idea of allowing investors to buy a ready-made portfolio directly instead of through mutual funds was mooted by Smallcase, which is a Bengaluru-based fintech startup that was founded back in 2015. Now, while the investment platform had flagged off with its own portfolios to start with, the idea has since been adopted by a diverse set of brokers and money managers who have now tied up with the fintech firm to offer small cases of their own to suit a variety of themes and investment needs. A small case is a basket of stocks that may reflect a particular investment theme, an idea, or a sector. So, for example, a dividend-yielding small case may be made up of high dividend-paying stocks, and an IT small case would comprise of leading software firms. Now, some of the themes that you may find while buying a small case is digital businesses, or momentum stocks, or value stocks, or stocks tied to the rural demand, etc. Now, small cases today host a dozen of ready-made portfolios and investing strategies that have been created by SEBI licensed professionals. So when someone says that they have bought a small case, it only means that they have bought a certain basket of stocks offered on the platform. But what is the difference between small cases and mutual funds then? Well, small case investing gives you a better control on investments as the shares are in your demat account. Now you can accept or reject a change recommended by the small case manager. And the churn in the portfolio is also quite transparent. Now, having shares in your demat account gives you the control to even time the exit and know exactly where your investments are. Now, on the other hand, investing through mutual funds does not give investors a control over the investment portfolio. Now, small case requires a higher capital for investing in comparison to mutual funds. Now, since this is like investing directly into shares, one has to buy each unit of them to create a portfolio. Therefore, it requires a higher capital. Some of the small cases have an initial investment of say 5,000 rupees. Mutual funds, on the other hand, are suitable for all kinds of investors, since the minimum amount for systematic investment plan or SIP is just about 500 rupees per month. Secondly, you will have to pay higher taxes because every time you sell a stock, you pay a short-term capital gains tax if it is less than 1 year duration, unlike in a mutual fund setup where you pay when you redeem your units. So the overall tax burden in this structure would be much higher. Now, third, there is also a concentration risk of particular strategy or theme or sector that may not continuously keep on working. So how can you invest in small cases, you ask? Well, to invest in small cases, you need a demat account first. Now, when you buy or sell a small case, the stocks featuring in it will also be credited or debited to your account. The minimum investment amount may vary depending on the stocks that actually make up a small case. Now, once a small case is chosen, you can invest a lump sum or choose to run a systematic investment as an SIP in it as well. Now, standard brokerage charges are also applicable while investing in such small cases. So, who should actually invest in small cases? Well, for investors who feel that they understand the stock markets quite reasonably and also don't want to pay for a service of, say, a professional fund manager and also lack time to sift through the entire universe of stocks, can invest in small cases. Also, you should know that it is a relatively new way of going about investing and it has only seen the bull market so far. So, its true test will be when the cycle really turns or not. Now, if you're interested in more expert views and discussions on small cases, you can head over to our website money9.com to catch up all the latest news articles and videos on small cases. Thanks for tuning in for now.